Today, we're delving into the complex operations of Meta Platforms Inc., exploring its core business, financial health, and some ambitious new strategic directions. We'll be referencing the Meta Platforms Inc. Meta Company Operations Overview as of January 11th, 2026.
That's right. Meta's mission, at its heart, is about connecting people and building communities. This is largely driven by an advertising-based revenue model. Their family of apps, which includes platforms like Facebook, Instagram, Messenger, WhatsApp, and Threads, generates the vast majority of that revenue.
So the FOA is the profit engine, but then there's Reality Labs, which seems to operate on a completely different financial footing. What exactly does Reality Labs encompass, and how does it fit into Meta's overall picture?
Reality Labs handles hardware such as their Quest headsets and all their metaverse-related initiatives. The crucial distinction is that Reality Labs continues to incur significant operating losses. This is primarily due to heavy research and development spending, representing Meta's long-term bet on augmented and virtual reality, as well as AI.
It sounds like a balancing act then. Let's look at the latest financials from Q3 2025. The overview mentions a record quarterly revenue high. What were the key figures there?
For Q3 2025, Meta reported revenue of $51.24 billion, which was up 26% year over year. Advertising revenue alone accounted for about $50.1 billion of that, indicating its continued dominance. Ad impressions were up 14%, and the average price per ad increased by 10%.
Those are strong revenue numbers, certainly. However, the reported net income of $2.71 billion seems quite low in comparison. The overview points to a substantial one-time tax charge. Can you elaborate on that impact?
Absolutely. The reported net income was significantly impacted by a non-cash $15.93 billion tax charge. This was related to changes in U.S. tax law, specifically the One Big Beautiful Bill Act. When you exclude that charge, the adjusted net income was approximately $18.6 billion, and the adjusted diluted EPS was $7.25 per share. So the underlying profitability was much stronger than the headline number suggested.
That clarifies the net income picture considerably. Given their heavy investment in areas like AI, I'd expect their expenses to be climbing. What did Q3 expenses look like, and what were the main drivers?
Total expenses reached $30.7 billion in Q3, representing a 32% increase year over year. This reflects substantial investments across infrastructure, the acquisition of AI talent, and overall compensation costs. It's clear Meta is pouring resources into future growth areas.
And on the user engagement front, are they still growing their audience despite all the competition? And what about capital expenditures related to these investments?
User engagement remains robust. Family daily active people averaged 3.54 billion in September 2025, up 8% year over year. Instagram now boasts 3 billion monthly active users, and Threads has surpassed 150 million daily active users. As for capital expenditures, they were substantial at $19.4 billion in Q3, mainly for servers, data centers, and network infrastructure to support AI. Their full-year 2025 CapEx guidance was even raised to $70 to $72 billion.
That's an incredible amount of investment, specifically for AI infrastructure. The company's stock is currently trading around $653, giving it a market capitalization of roughly $1.65 trillion. It clearly positions Meta as one of the world's most valuable companies. But this leads us to the most recent, and perhaps most surprising development, Meta's entry into major nuclear energy agreements.
This is a truly significant shift. In January 2026, Meta announced major nuclear energy agreements to power its surging AI data center needs, particularly for its Prometheus AI supercluster coming online this year. These deals aim to secure up to 6.6 gigawatts of clean, reliable nuclear power by 2035.
That's enough energy to power millions of homes. Who are they partnering with to achieve this colossal goal?
They're entering into multiple partnerships. First, with Vistra for 20-year power purchase agreements for over 2.6 gigawatts from existing nuclear plants in Ohio and Pennsylvania. They're also supporting Oklo, an advanced small modular reactor company, for a 1.2 gigawatt campus in southern Ohio. Pre-construction for that project starts this year, with the first phase potentially online by 2030.
And there's a third partner as well, isn't there?
Yes, they're also funding new reactors with TerraPower, which is backed by Bill Gates. This initial phase aims for up to 690 megawatts by 2032, with rights to energy from additional units by 2035. This really positions Meta as one of the largest corporate buyers of nuclear energy in the US, a response to the massive power demands of AI, a trend we're seeing with other tech giants like Microsoft, Amazon, and Google.
It's a clear signal of the energy intensity of advanced AI. Beyond these massive energy deals, what other recent developments are worth noting for Meta?
In late 2025, Meta acquired the AI agent startup Manus for over $2 billion, further bolstering its AI capabilities. There's also ongoing regulatory scrutiny, particularly regarding scam ads and EU personalization rules, which Meta continues to navigate. But the overarching theme remains the pervasive integration of AI across all its platforms.
What we're seeing with Meta is a company with a highly profitable core in its family of apps, actively balancing that success with incredibly ambitious and capital-intensive bets on the future of AI and the metaverse, even extending to securing its own nuclear power sources. It's a fascinating look at how a tech giant is preparing for the next frontier. If you found this discussion insightful, consider sharing it with someone who might also find it valuable.